Here is the screencast, excuse me, for the Consumer Economics Unit 3 notes on taxes. So what is the purpose of taxes? Why do we pay them? Well, the primary purpose of taxes is to pay for to pay for government operations, facilities, and services. So that would include services such as fire and police protection. So paying salaries of our firefighters, our police officers, any cars or vehicles needed, any resources needed related to that. And that is typically on the more local level in terms of funding for those things. Schools, same thing. The public school system is funded through taxpayer money, locally, most times. Highways, if you have an interstate highway, for example, so like I-80, it runs through more than just Illinois. It runs a good length of the country. That's funded through federal taxes because it goes from across state lines. Airports are funded by tax money as well. Parks, I talked about how there was a referendum for the Joliet Park District a couple years ago, and it passed. And a referendum is kind of like a something that's put on the ballot when it's time to vote, especially when there's a chance that they need to raise taxes in order to cover the cost of something new. So, when a Joliet Park District referendum was on the board, was on the ballot, it did pass. It raised our taxes, but it allowed the park district to have more money to fund the cleanup and the redoing of some of our parks in Joliet. And then also, it provided funding for a brand new facility at Noel Park, which is on the east side off of 53, that they're actually getting ready to open in just a minute. And so those things are able to be done because of taxpayer money. And then also water and sewage treatment. Reasons why taxes may be raised or lower. There's three main reasons. First of all, stabilizing the economy. The government may use taxes to promote economic stability, fight inflation, or slow a recession. As a matter of fact, a couple of years ago during the Bush administration, so this would have been before President Obama was in office, the economy was not doing that great. And so what was done is taxpayers were all sent in the mail what was called a stimulus check. And what it was is some of the money that they had paid in income taxes was sent back to them. And what they were supposed to do with it, what was asked of them to do with it, is to go out and spend it. So go to the mall, go shopping, go to the movies, go out to eat. Don't save it. Put the money back into the economy to get it flowing, because that helps to get the economy going, get people spending money. It helps with jobs. It helps so many things when that money is moving. So that's one way that taxes may be used to slow a recession. Addressing social challenges, So some taxes are used to provide for populations that are in need and by supporting an economy that raises the country's standard of living. So that would be like the fact that we pay taxes to pay for with Medicaid, which is health care coverage for those that would not be able to afford it otherwise. And so that helps take care of those that may need that extra assistance. Then also influencing behavior. By removing taxes from some items and taxing others, government tries to change people's behaviors. This would include things like the sugary drink tax that was placed in Cook County last year that quickly got removed. Cook County wanted people to cut down on those sugary drinks, and so they were taxing them to buy them. Other taxes that have to do with influencing people's behaviors would be the additional taxes on cigarettes, as well as additional taxes on alcohol. The government wants us to think twice about buying those things because they are not necessarily good for us. And so if we are spending a little bit more on it, we'll think a bit more about whether or not it's something that we should be using or having. Mandatory expenses. So what does our tax dollars pay for? Well, there's a couple things that they pay for going toward the federal government, because the federal government also guarantees that it's going to cover some of those expenses through that taxes that they collected. So a mandatory expenditure is a commitment the federal government has made and must pay those expenses. Examples of mandatory expenses include entitlement, which is a government payment or benefit promised by law to eligible citizens such as Social Security and Medicare. Um, Other entitlement programs include federal employee retirement benefits, veterans pensions and medical care, nutrition assistance, unemployment compensation, and housing assistance. So that's all ways that our taxpayer money is used in different programs. Also, interest on the national debt is also a mandatory expense. This interest is paid to financial institutions, foreign investors, and governments, and individuals who buy government securities. Social Security, we've talked about this in Unit 1 when you all talked about taxes that are taken out of your paycheck before you can take the rest of your money home. But Social Security is a federal program that provides income when earnings are reduced or stopped because of retirement, serious illness or injury, or death. Benefits are funded by a payroll tax on a worker's income and matching contributions by employers. And so once you reach a certain age, you can then draw from that Social Security that you've been paying into. I believe the age is 62, and they're typically that age does continue to rise as Americans are living longer and as that pool of money is getting smaller. The federal government has raised that age. Also, Medicare. It's another thing that's taken out of your paycheck when you get paid. And Medicare is a federal program that pays for certain health care expenses for older citizens and others with disabilities. It is funded by the payroll taxes and administered by the U.S. Department of Health and Human Services. You are able to access Medicare when you are 65, and it will cover your medical bills or medical expenses, just like whatever insurance you may have had previous to that. And then Medicaid. Medicaid is a little bit different in the sense that it's funded by both the federal government and state governments. But it is a government program that pays certain healthcare costs for eligible low-income individuals and families. And like I stated before, the funding comes from state and federal tax revenues. Let me go back real quick. It's going to be very important that you understand the difference between Medicare and Medicaid. Medicare is for older individuals. 65 is when you can access it. And then Medicaid, as an aid or assistance, is for those that would not otherwise be able to afford insurance. So low-income individuals and families. State and local government spending. Oftentimes, the state and local government spending is what affects us the most as taxpayers, because this is where a lot of those things that we use on an everyday basis gets covered by our money. So we're just going to look at some of the categories of taxes and understand that one type of tax is not fit just in one category. It can be a combination of two or what have you. So I'll explain as we go through. So direct taxes, those are taxes paid directly to the government by the taxpayer. Example of direct taxes would be income taxes. Indirect taxes are taxes levied or imposed on one person or entity, but shifted to or paid by another. Indirect taxes, an example would be when we pay sales tax when we buy something in the store. Progressive taxes impose a higher tax rate on those with higher incomes, such as with income taxes. So, for example, federal taxes and some state taxes, but especially the federal taxes, would be considered a direct progressive tax. We pay it directly to the federal government, and the amount we pay is based on the amount of money that we make. And then we have regressive tax. Regressive tax imposes a higher tax rate on those with lower incomes. Next, we have proportional tax, and that imposes the same tax rate on all individuals or entities regardless of difference in income or ability to pay. So that would be like your sales tax. So if we go back to look at that definition, sales tax would be considered a indirect proportional tax. Okay? So what kind of things are taxed? Well, frankly, everything, and sometimes some things are even taxed twice. So income is taxed, purchases are taxed, property is taxed, as well as wealth. So we're going to look at these right now. Personal income tax is tax that's levied on money you receive from income. So that is your income tax, right? So that's your tax that you gets taken out of your paycheck when you get paid, and that's the taxes that you file at the end of the year. Purchase tax is levied by state and local governments on purchases of goods and services. Please note that sales tax or purchase tax are on the state and local government levels, not federal. Excise tax, that's levied on federal and state governments on the sale and transfer of certain items. Sometimes those excise taxes have to do with those taxes where they're influencing consumer behavior. A good example of the excise tax, the best one, would be gasoline. So when we go and fill our car up with gas, we are charged a tax, although we are not always clear about what that tax is because it's included in the price per gallon. But that tax that we pay for fuel is considered an excise tax. Property tax is levied by property you own. So for example, in Illinois, we pay very high property taxes. Our property taxes are actually, I believe, only the second or third highest in the entire country. Wealth tax, that's levied on assets. So that's a tax that you have to pay because you have things that are of such of high wealth and worth. So there's two main types. One is estate tax, which is a tax on estates over a certain amount. And then the other one would be a gift tax, which is levied by the federal government on donors or givers who transfer assets over a given amount of time to others. So the best example of this is like when you win the lottery and you have to pay taxes on that money that you won. Or if you go on a game show and you win money and you have to pay taxes on that. Paying income taxes. The Internal Revenue Service, or the IRS, is the government agency responsible for collecting federal income taxes. You all do need to know what the IRS stands for, Internal Revenue Service. You are going to see that on the test. Each year, taxpayers must file a tax return with the federal government. A tax return is a report containing information used to calculate taxes owed by the taxpayer. Okay, and we will be practicing filing a federal income tax form as well, and you all will be tested on that for your Unit 3 exam. So what's your employer's role in this? So we talked a little about this with Unit 1. But when you begin a job, your employer will ask you to fill out a Form W-4. This form is called the Employees Withholding Allowance Certificate 7-5. It tells your employer how much to withhold from your pay. The amount of income tax withheld from your paycheck depends on how much you earn and the number of allowances you claim. We went through that W-4 in class together during Unit 1, and we talked about how the fact that the more allowances you claim, the less tax will be withheld from your paycheck by your employer. Keep in mind, that does not mean that you do not have to potentially pay more taxes at the end when you file. It just depends. Do you want to hold on to that money now, or do you want to have to pay it later? Either way, the government's going to get whatever it is that you owe. It's just about whether you give it to them now or you give it to them later after you file your taxes. Each year in January, you receive a W-2 form from each employer. This is called a wage and tax statement. It states the amount that you were paid during the previous year. So if you happen to work 2 or 3 jobs in 2018, you'll get a W-2 form from each of your employers. You will receive a Form 1099 miscellaneous if you receive income from self-employment, royalties, rent payments, unemployment compensation, and other resources. So that's typically income that you receive from other resources that you did not pay taxes on throughout the year. Because if you're self-employed, for example, you don't have an employer taking out those payroll taxes out of your paycheck. Preparing your return. In order to prepare your return correctly, you need the following records. You need a Form W-2 from each of your employers. You need all 1099 forms. You need other records of income, such as tips, because if you are like a waiter or a waitress, for example, and you are making below minimum wage, you are expected to be paying taxes on your tips that you receive. Social Security number for yourself and your household members. Copies of your tax return from the previous year you filed. And forms and instructions from the IRS. So that can be electronically or be found at public places such as the post office and the library. So you also need to choose a tax form. When filing a tax return, you will use one of the three common forms, either a 1040-EZ, a 1040-A, or just a plain 1040. These forms are updated every year and are available on the IRS website or at public places such as the library and post office. The tax instruction booklet tells you which form to use. So one option is the long form, which is just the standard Form 1040, which is used by taxpayers with an income over a certain amount or with itemized tax deductions. Or you can also use a short form or Form 1040-EZ or 1040-A, which is used by taxpayers whose income falls within certain limits and choose not to itemize tax deductions. So when we are going to go through the 1040 in class, we will be doing a 1040-EZ. This would also be the form that you all will more than likely use to file taxes. Adjustments. Those are other expenses that reduce your taxable income. This helps to reduce the amount of income that is taxed. Exemptions. That is a tax benefit that reduces the amount of income that is taxed. A standard deduction. That's a set amount that you may deduct from gross income before determining tax. And then a tax credit is going to be the most beneficial to you. This is an amount that you can subtract from your taxes you owe if you are eligible. It is a greater advantage than an exemption or tax deduction subtracted from taxable income. Filing on time. The final date for filing taxes for the previous year is April 15th. This is on the test. You do need to know this. April 15th is the deadline for filing taxes. Tax avoidance. That is reducing your taxes by claiming legitimate adjustments, tax deductions, and credits. This is legal. It is a legal way to avoid paying unnecessary taxes. It's okay to do as long as you can back up whatever claims you make. However, tax evasion, which is failing to declare all income or falsifying deductions, adjustments, or credits, is a criminal offense and can carry heavy penalties. There's a lot of famous people that have gotten into big trouble with the federal government because they haven't paid their taxes or they make false claims about their income or other things such as that. A tax audit is also important to know. This is a detailed examination of your tax return by the IRS. You are by law supposed to keep up with your tax returns for at least 7 years because the IRS can contact you and say, we need to see your records from a previous year, because they do audits every year just to make sure that people are being transparent and correct about their taxes that they paid and those claims within those files. And that is all.